So Coinbase stock has not had a good start to this year, okay? Year-to-date returns are already down 46.6%. This is also versing something like Bitcoin, which is only down around 19%, even though the price of these two investments are supposed to be correlated. So in this video, I'm going to tell you guys why this stock is dropping so much, why I have such high conviction, and what's new with the company and what's planned going forward. But let's just jump right into it, knowing that Coinbase's share price is at $135 a share, okay? But that, though, whenever you compare to actually TipRank's price for this company, okay, which is all the analysts combined, what sort of price that they're putting on the stock is already at $283 a share, or 110% upside for this company. Now, I want to talk about some numbers between Bitcoin and the correlation with Coinbase. Now, Bitcoin's not a business or anything along these lines. It's a currency. It doesn't make you any money. The only way to actually make money on Bitcoin is through the appreciation of the actual coins, for which in the full year of 2021, the actual price of the coin has risen over 65%. Now, Coinbase, on the other hand, has had a rocky 2021 in terms of their share price, along with a lot of growth companies. But regardless of that, their actual revenues, what's actually grown, has actually grown from 1.1 billion at the start of 2021 all the way to the end of 2021, the fiscal year, up to 7.3 billion. That's up 544% year over year on their revenues. Now, obviously, this comes with a whole new batch of expenses as well, right? I mean, that revenue doesn't come free. But those expenses, whenever they go to hire employees, get new office space, and all these sorts of things, only grew about 448%. So we see that large margin of what is, to be profit for this company in 2021. But all this doesn't matter if the actual multiples of the business are way too high and are already expecting high growth. If you can't match that or even beat it, then the actual price of the company is going to drop. Now, in Coinbase's example, this isn't even true at all, okay? Whenever you look at the S&P 500 PE ratio, okay, which is not hypergrowth, that is the benchmark. You have a 22 times trailing PE ratio on the S&P 500 as of April of this year, where in Coinbase's example, you have a 9 times price to earnings ratio, okay? 9 times. And then whenever you actually place it in a sector that it's in, or shouldn't be in, but it is in, is Bank of America, okay? A very slow growing, big, large financial institution at a 10.7, trailing PE ratio, higher than Coinbase in an extremely fast growing business. Then whenever we look at price to sales ratios, Coinbase's price to sales ratio is at 3.7 times versus Bank of America's 3.5 times, just a little bit over, Bank of America, which should be a slow growing dividend company that you give to old people for their retirement plans. Obviously, I'm over exaggerating just to get my point, but whenever you look at the actual, rate of total revenue growth for, Coinbase, you have 544%. Bank of America saw a 12.2% year over year growth in the same period. Now, Coinbase's revenue growth is expected to drop because obviously the price of Bitcoin and just the total market cap of the crypto economy has been stagnant since, November of 2021. My problem here is, unlike betting on Bitcoin, where the only way for you to make money aside from staking or some other third-party accounts that could possibly earn you some interest, the only way to actually make money through Bitcoin is selling a coin at an appreciated value, which has not happened. The way that Coinbase actually operates and the way they make money is a toll booth system. So it's the people actually betting on the coins actually going up and down, which happens every single day. No matter if Coinbase's or Bitcoin's price does not change at all, Coinbase will continue to make more and more revenue depending on how many users actually use their platform. Now, the opposite side of this argument is actually saying that because there's so much fierce competition, that the actual fees that Coinbase had to offer before has to go down to actually compete with some of the more, competitive people like FTX in this space. Now, this is not a new argument at all. This has been the same one that they've been talking about since Coinbase actually went public. The truth is that they do not move their fees at all, okay? And whenever they do move their fees, for example, like for Coinbase One, and we'll talk about that, there's a subscription plan that also brings in new revenues. And there's also so many other ways that Coinbase is trying to make more money that doesn't actually involve the appreciation of price of their actual crypto assets that they're holding. One of the ways, and the most exciting way, that one that I've been hyping up, has been Coinbase's NFT marketplace, okay? They're actually launching a social marketplace for NFTs where, almost like you can think about Instagram, where people are actually posting their NFTs and people can comment on them, talk about them, or even buy and sell them. And Coinbase actually takes, a marketplace fee for that, for actually connecting the buyers and the sellers. Now, even though Coinbase actually released their NFT marketplace, which whether you can say that it's going to add high revenues or low revenues, it's going to be new revenue, okay? It's going to be added on to the additional revenues that's not going to affect the other business that we have. The problem is, and where everyone's actually starting to bash Coinbase, is that the NFT sales are actually starting to drop and that Coinbase was not fast enough to innovate and put out this marketplace, and OpenSea had taken too much of the market share. I have two main arguments to this point, okay? One, OpenSea is the biggest live NFT marketplace that exists today, okay, with over 600,000 members. They did over $1 million in trading in a single day whenever it came to last year. Today, as of April 15th, they did over $53 million in active NFT trading sales. Now, was that anywhere near what it was back in November? No. But the truth is that's still a massive growth from where it was just 1 year ago. Did Coinbase miss the absolute peak of this year? Maybe. Will there be a new peak that comes? Potentially. I don't know. But they have not missed out on the total market share. Just like I said just about 1 minute ago, that OpenSea has around 600,000 members on their NFT marketplace. Coinbase, as of the time of opening up this NFT marketplace, opened up a wait list for people to join in, and they got 3.7 million active users wanting to sign up for their NFT marketplace, making it by far the biggest NFT marketplace once it actually goes live. They've only allowed in a couple thousand people so far, and will continue to roll it out into the coming months. And Coinbase is actually going to be doing a pretty cool thing with this product to actually get those users to actually sign up rather than just, get an email, okay? They're actually going to make the NFT sales for the short period of time, I'm sure it's going to be like 6 months or so, have no transaction fees, okay? So it's actually going to take a lot of those OpenSea members to go, oh, why am I actually posting this on, OpenSea and they're taking a 2 to 2.5% rate when I can go and post it on Coinbase and get an additional, same sort of sale price and get that no fees taken, more to the actual creator. So more people are going to be signing up for Coinbase, and then they're actually going to switch to a market rate of around 2 to 2.5%, same as OpenSea. So there's going to be no reason to ever go back, considering that you've already moved a lot of your actual NFT sales to this platform. Then, the next is just gravy for us, right? We just take on a whole new section or sector that actually is just going to bring on new revenues. More revenues for us, and we're not subtracting from any of our other businesses. Now, they actually have a quote here, and I'll put it up on screen, but I'm not going to read it just to save a little time. But there's a part here where they're actually talking about multiple chains for their NFTs. And this actually brings me to my next point whenever I want to talk about how they're actually added the Solana ecosystem to the Coinbase wallet. Now, for all the cryptocurrency beginners or someone that might not know this, Coinbase wallet before was only allowing ERC20 tokens. This was the protocol that actually allowed Ethereum to run, or all of the many hundreds of coins that actually ran on the same protocol. Now, Solana doesn't run on ERC, okay? It's like having a computer that runs Mac OS versus Windows OS. They're different computers. They do very, very similar things, but they just don't cooperate with one another. They're written in 2 different languages. Now, for the longest time, my phone actually had Coinbase Wallet, which allowed my ERC tokens, and then I also had Phantom, which allowed for my SPL tokens, which were the tokens for the economy of, Solana. But now Coinbase is revolutionizing this, and there's been other people to do this, but they're actually bringing on multiple different chains onto one wallet. Imagine actually walking around with your wallet and having all your different, debit cards and credit cards all in different wallets. It just doesn't make any sense. So there's no reason for me to ever have Phantom anymore, because I can actually bring it all over to Coinbase, and they just allow me to hold more assets under management with them. And I'm going to not be the only one to actually do this. They're going to bring all the sort of Solana-based people that might already be using their wallet to just transfer over all their assets under management, because they can now have it on one big safe digital wallet. Now, just going on to a new topic of Coinbase still trying to innovate and sort of acquire new sorts of business, what they also did was they actually bought a full-on business, okay? They bought BTC Turk for $3.2 billion, or at least they're in talks to do so, and they're just finalizing up the deal. BTC Turk is actually Turkey's oldest cryptocurrency exchange, which counts for over 4.5 million users. And actually, they also did around $116 billion in trading volume as of 2021. And funny enough, this wasn't even their only acquisition that they made this month alone. As of March 28th, they actually talked about acquiring 2TM for $2.2 billion. Now, 2TM is actually a really big company, okay, that's actually been acquiring other Bitcoin exchanges. They have around 9 different companies that they've acquired before, and we've sort of taken all of them under our wing. Now, they're mainly based out of Brazil, but they also have other businesses in Mexico as well. So we've acquired a company all the way out in Turkey and another one in Latin America, America, and it's really just sort of putting the global in Coinbase Global. These are really huge aspirations that Brian Armstrong is actually going after, and I think acquiring these companies is a really great way to increase our monthly active users while the price of Bitcoin is actually down. They're actually getting really, really good deals on this. For example, BTC Turk, they were actually in talks to actually acquire them for $5 billion. But because of the price of Bitcoin actually dropping, they were actually able to get them for $3.2 billion. Now, Brian Armstrong's already spoke about how some of the best deals that they've ever made was back in 2018, 2019, when Bitcoin prices dropped down a ton, okay? They made amazing investments. Now, they're sort of talking about how they're doing the same thing with acquiring these companies while they're still very cheap. Now, just off that stuff for a bit, what I wanted to actually talk about was Coinbase One, their actual subscription service that allowed for free trading, no transaction fees, but a $30 a month fee for all of their US, based cryptocurrency exchange users. Included in this subscription, along with the transaction fees, are also $1 million of account protection, like insurance if the account or the exchange actually gets hacked, as well as 24/7 support for your any of the questions that you might have or anything customer support. Now, I don't actually have any statistics. I'm hoping that we actually see a little bit more of Brian Armstrong talking about this in Q1, but it is very, cool that they're actually trying to innovate on a lot of these new products. I'm very excited to see how it actually works. I think for the next year or so, the stock is going to still stay very correlated with Bitcoin, Ethereum, all the big cryptocurrency prices, okay? But I think the more types of businesses and different streams of revenue that we start to bring on, the more decoupled we're actually going to get from that price. And we should start to accelerate as people actually start to, really like the actual toll booth style business that Coinbase has to offer. And these valuations have to go up. And that's the big thing which actually changes the price of a stock. It's not revenue growth or profits or anything like this. It's valuations. Imagine putting a 30 times trailing PE ratio on Coinbase, how much that would triple the stock from here. And like I showed you from analysts, whenever they're looking at a $283 price range or 110% upside, that's the first step that they think it's going to actually do, is valuation multiple change. That's pretty much it, but I'll also be keeping you guys up to date on May 12th whenever the Q1 earnings results actually come out. Good or bad, I'm going to be covering it, but if you guys haven't already, make sure you guys like the video and subscribe down below just so then you guys get notified whenever I actually post that video. And if you haven't already, show some love to some of my other videos. I just made an NVIDIA video right there. It's actually talking about retiring on that stock by 2030 and how many shares you might need to do so. But until next time, guys, thank you so much. Thanks for watching. Bye for now.